All right, Peter Cardillo is with us. He's Chief Market Economist at Spartan Capital Securities. Peter, good to have you with us here. Good morning. Thanks very much for your time. We've had a very nice sort of Goldilocks kind of market in the first quarter. Will that continue into second quarter? Do you see anything changing at all?
I don't see things changing very much. Obviously, we're going to be heading for the earnings season, and I think for the most part, earnings probably will come in within market expectations. And the fact that the PC price index came in line with expectations, and the key obviously was the year-to-year core rate inflation, which stayed unchanged at 2.8%. And that's good news because I think, we can expect inflation to continue to move lower. And what we saw in the December, January months, I think can now be considered a blip. Maybe a month ago, we were doubtful about that, but now we think that yes, inflation is coming down. Of course, there's always the wild card, and that wild card is if energy prices should begin to move much higher from these levels and stay there, then that would be a problem. But I was very much impressed with the fact that Powell on last Friday, he basically stayed to his script and was somewhat on the dovish side, and he continued to say inflation is going in the right direction, but we need more evidence of that. And so I think that's probably going to rekindle the June rate cut, and that's why the market is going up. And if you look at gold prices today, making new records, that's part of it.
All right, gold prices making new record highs, got that. But how are you feeling, Peter, about the Indian economy now? Because growth has been picking up. In fact, we have the RBI policy coming up this week, and the expectation is that there won't be any move on rates, but there could be a change in the stance to neutral, preparing for rate cuts to come in this calendar year. Your thoughts?
Yeah, well, as far as the Indian economy is concerned, I'm bullish on India. I think it's catching up to China, and maybe it might actually surpass China over the next year or two. And if that happens, it becomes a powerhouse. And so I think that the Indian economy will continue to do well. Obviously, in terms of interest rates, the central banks, that is the global central banks, are basically all on the same page, and they're all looking to cut rates at a time when they feel that inflation has gotten under control. So yes, I'm bullish on the Indian economy.
All right. Hi, Peter. Good morning and good to see you. And I recall when the last time you joined us, you said that China has structural issues. So that's why you prefer India, and you're sticking to that. But in the near term, do you believe that there could be a case that you go tactically overweight on China, or do you say, no, it has too many issues, you'd rather not go down that path? And also, I just want to reconfirm, how many rate cuts are you factoring in from the Fed?
Well, to be honest with you, up until we got the PCE price numbers on Friday, I thought we were going to get only 2 rate cuts this year, and possibly even 1. But now that I see the year-to-year core rate staying at the same needle, then there's a possibility we'll get 3 rates. However, there's another scenario to that, and that scenario is this. The Fed, could cut only twice this year, but instead of cutting 75 basis points by a quarter of a point 3 times, they may just cut 50%, and by 50 basis point, and then follow by another 25 basis points, which would give you your 3/4 of a percentage point cut in the course of the next in the course of the second half of the year. However, again, so that would be a scenario if, let's say, inflation remains elevated and the Fed decides not to cut in June, then that means that in September, they could cut by 50 basis points and then 25 just before year end. And that would make up the 75 basis point that the market is talking about.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your time here on CNBC TV 18.